Title: The Intersection of AI Innovations and Financial Markets from Houston. Introduction.
Welcome back to FinanceFrontierAI. Today we're broadcasting from the iconic Texas Medical Center in Houston, right in the heart of the world's largest medical complex. Known for its cutting-edge healthcare innovations and research, Houston is also a significant player in the energy and finance sectors. Did you know that Houston is not only leading in healthcare but also an emerging hub for AI innovation?
That's right. Houston's Texas Medical Center, TMC, is home to over 60 medical institutions, including prestigious hospitals and research facilities like MD Anderson Cancer Center, Baylor College of Medicine, and Texas Children's Hospital. These institutions are at the forefront of medical advancements, making Houston a critical player in global healthcare. Beyond healthcare, the city's strategic position in energy and finance sectors also contributes significantly to its economic landscape.
In recent years, Houston has become a hotbed for AI innovation in healthcare. The city hosts numerous conferences and symposiums focused on healthcare technology, attracting experts and innovators from around the world. The integration of AI into medical practices here is not just a future prospect but a current reality, with ongoing projects aimed at revolutionizing diagnostics, patient care, and administrative efficiency.
And this integration isn't limited to healthcare alone. Houston's vibrant economic environment also makes it a pivotal city for financial and technological advancements. In this episode, we'll dive deep into the latest trends and developments shaping the future of finance and AI, directly from a city that epitomizes healthcare excellence and economic diversity.
Here's what we have lined up for you. First, we'll cover the top news of the week, including the Federal Reserve's upcoming meeting and its implications for the economy.
Then, we'll discuss how the markets are reacting to mixed economic data and what it means for investors.
We'll explore the impact of the U.S. debt ceiling agreement on the economy and the latest movements in crude oil inventories.
Additionally, we'll delve into the role of rising inflation rates on bond yields and investment strategies.
Finally, we'll touch on significant global news, such as the Reserve Bank of India's recent decisions and their impact on investors.
Whether you're an investor, a tech enthusiast, or someone keen on understanding the forces shaping our world, stay tuned. Let's dive into these complex topics with the clarity and depth they deserve.
Remember to share this episode with your friends and subscribe to our podcast for more insightful discussions. Your support helps us bring you the latest and most impactful insights in finance and technology.
Chapter 1: Top News of the Week.
Max, let's kick off with the top news of the week. What's the latest from the Federal Reserve?
The Federal Reserve's next meeting is scheduled for June 14 to 15, 2024. There's a strong expectation that the Fed will hold rates steady amid economic uncertainties. This cautious approach is driven by the need to manage inflation without stifling economic growth. Recent economic data, such as the ISM Manufacturing PMI, which came in at 48.7 compared to a forecast of 49.8, and the ADP Nonfarm employment change showing 152,000 jobs added versus the expected 173,000, suggest the Fed is carefully balancing these priorities.
How are the markets reacting to the latest economic data?
The stock markets have been quite volatile due to mixed economic data. For example, the S&P Global U.S. Manufacturing PMI for May was 51.3, above the forecast of 50.9. However, the ISM Manufacturing PMI came in lower than expected at 48.7, which has caused some concern among investors. This mixed data reflects ongoing uncertainties about the strength of the economic recovery, impacting investor sentiment and leading to fluctuations in the market.
What about the U.S. debt ceiling agreement? How is it impacting the economy?
The recent resolution of the U.S. debt ceiling crisis has provided some short-term relief, avoiding a default. However, it also brings long-term concerns about fiscal sustainability. For example, the JOLTS job openings for April came in lower than expected at 8.059 million versus the forecast of 8.370 million, indicating potential slowing in job growth. This, combined with higher debt levels, could lead to increased borrowing costs and reduced fiscal flexibility in the future.
Thanks for the updates, Max. It's clear that these developments are crucial for investors and policymakers alike. Let's move on to another major news item: the impact of inflation on bonds. What can you tell us about that?
Rising inflation rates have had a significant impact on bond yields. For example, the yield on the 10-year Treasury note ended May 31, 2024, at 4.51%, influenced by ongoing inflation concerns and the Federal Reserve's policy stance. Higher yields are tightening financial conditions, which impacts investment strategies and real GDP growth.
What should investors focus on in this environment?
Investors might need to adjust their strategies, focusing on sectors that traditionally perform well during inflationary periods, such as commodities and real estate. Additionally, they may consider inflation-protected securities, like TIPS, Treasury inflation-protected securities, to mitigate the impact of rising inflation on their investments.
That's a comprehensive analysis. Max, moving on. What's the latest on the job market?
The job market has shown mixed signals. For example, the ADP Nonfarm employment change for May reported 152,000 jobs added, below the expected 173,000. Additionally, initial jobless claims came in at 229,000, slightly higher than the forecast of 220,000. This suggests that while the labor market remains relatively stable, there are signs of slowing momentum. The unemployment rate for May held steady at 3.9%, indicating that the job market is still resilient but facing headwinds.
How do these job market trends impact the broader economy?
A stable but slowing job market can have several implications. On one hand, it indicates that businesses are cautious about hiring amid economic uncertainties, which could dampen consumer spending and economic growth. On the other hand, a steady unemployment rate suggests that the labor market isn't deteriorating rapidly, which is a positive sign. Policymakers will need to monitor these trends closely to balance economic growth with inflation control.
Thanks for the detailed insights, Max. Let's touch on another significant development: the recent movements in crude oil inventories. How are they shaping up?
Crude oil inventories have been quite volatile. For the week ending June 5, 2024, crude oil inventories increased by 1.233 million barrels, contrary to the forecasted decrease of 2.100 million barrels. This unexpected rise in inventories suggests that demand might be lower than anticipated, which could impact oil prices and the broader energy market. The energy sector, particularly in Houston, will need to adapt to these changing dynamics to maintain profitability.
It's interesting how these inventory levels can influence market dynamics. What are the broader implications of these changes in the energy sector?
The broader implications are multifaceted. For one, increased inventories can lead to lower oil prices, which benefits consumers and businesses that rely on oil. However, for energy companies, this could mean reduced revenues and profits, leading to potential cutbacks in investment and production. Additionally, fluctuating oil prices can impact inflation rates and economic stability, making it a critical factor for policymakers to consider.
Thank you for that comprehensive overview. Now let's move on to the global stage. What's the latest news from the Reserve Bank of India?
The Reserve Bank of India, RBI, recently decided to maintain its current interest rates to support economic growth amid global uncertainties. This decision is aimed at balancing inflation control with the need to foster economic development. India's economy has shown resilience, but like many other countries, it faces challenges such as inflationary pressures and global economic volatility. The RBI's cautious approach reflects these complexities as it navigates through these uncertain times.
It's crucial for emerging markets to maintain such a balance. How are investors reacting to the RBI's decision?
Investors have reacted positively to the RBI's decision, viewing it as a prudent move to sustain economic growth while keeping inflation in check. The Indian stock market saw a slight uptick following the announcement, reflecting investor confidence. However, there remains a cautious outlook due to ongoing global economic challenges. Investors are keeping a close eye on how these policies will unfold in the coming months and their potential impact on the broader market.
Thank you, Max. It's clear that these developments are crucial for the financial landscape. Stay tuned as we dive into additional major news in our next chapter.
Chapter 2: Additional Major News.
Welcome to Chapter 2, where we cover additional major news. Let's dive into some significant developments starting with cryptocurrency regulations. What's been happening in this space, Max?
The U.S. House of Representatives recently passed a comprehensive crypto regulation bill. This landmark legislation aims to provide clearer guidelines and reduce market volatility by addressing critical issues such as security, fraud prevention, and investor protection. The bill's passage is seen as a major step forward for the industry, potentially attracting more institutional investors and fostering a more stable trading environment.
That sounds like a major development. What else is happening internationally in the crypto space?
In India, there is a significant regulatory conflict between the Securities and Exchange Board of India, SEBI, and the Reserve Bank of India, RBI. SEBI advocates for a more progressive regulatory framework to harness the potential of cryptocurrencies, while the RBI remains cautious, emphasizing the risks associated with digital currencies. This clash highlights the challenges in formulating cohesive policies that balance innovation with risk management.
It's clear that cryptocurrency regulations are evolving rapidly and impacting market dynamics globally. Now let's talk about Netflix. What's been happening with their stock movements recently?
Netflix has experienced a significant rise in its stock, up 29.7%, driven by substantial subscriber growth. The company is on track to add 30 million new subscribers, largely fueled by the success of its ad-supported tier. This strategic move has significantly boosted investor confidence and stock performance. Additionally, Netflix's investment in original content and international expansion has played a crucial role in attracting new subscribers.
That's impressive growth. How have analysts responded to this performance?
Several analysts have raised their target prices for Netflix stock, reflecting their confidence in Netflix's continued growth and market strategy. This optimistic outlook is based on the company's innovative approach to content delivery and subscriber engagement. Analysts are particularly impressed with Netflix's ability to monetize its extensive user base through its ad-supported tier, which has opened up new revenue streams. Additionally, the company's focus on local content production has been well received, catering to diverse audiences and enhancing global appeal.
What strategic moves has Netflix made to support this growth?
Netflix's expansion of its ad-supported tier and international revenue growth have been crucial. Their innovative strategies in content delivery and subscriber engagement continue to drive stock performance, making Netflix a strong player in the streaming market. Furthermore, partnerships with local content creators and investment in high-quality original programming have strengthened their market position and brand loyalty.
Thanks for the update. Now let's shift our focus to emerging markets. What are the latest developments there?
Emerging markets are seeing a surge in investments, particularly in the technology and renewable energy sectors. Countries like India, Brazil, and Vietnam are attracting significant foreign investments due to their strong economic growth prospects and favorable regulatory environments. For instance, India has become a hotspot for renewable energy investments, with numerous solar and wind projects receiving international funding. Additionally, the technology sector in these countries is booming, with startups and established companies alike attracting venture capital and expanding their operations.
What are some specific examples of these investments?
One notable example is the recent investment by a leading venture capital firm into an Indian tech startup specializing in AI and machine learning solutions. This startup aims to provide innovative AI tools to enhance business processes across various industries. Another example is the investment in Brazil's renewable energy sector, where international companies are partnering with local firms to develop large-scale solar power projects. These investments not only boost the local economies but also contribute to global efforts to combat climate change.
It's exciting to see such growth and innovation in emerging markets. Let's move on to fintech. What are some of the latest innovations in this space?
Fintech continues to revolutionize the financial sector with innovations like digital banking solutions, blockchain advancements, and AI-driven financial services. One significant development is the rise of neobanks, which are digital-only banks offering seamless and cost-effective banking services. These neobanks are leveraging AI to provide personalized banking experiences, from financial planning to customer support. Additionally, blockchain technology is being integrated into various financial services to enhance security, transparency, and efficiency.
What impact are these fintech innovations having on traditional banking?
Fintech innovations are pushing traditional banks to modernize their services and adopt new technologies. Many traditional banks are partnering with fintech companies to integrate digital solutions into their offerings, such as mobile banking apps with AI-driven financial management tools. This collaboration allows traditional banks to stay competitive while providing customers with enhanced banking experiences. Additionally, the rise of fintech has increased competition in the financial sector, driving down costs and improving service quality for consumers.
It's great to see such collaboration. What about the ethical use of AI in these industries?
The ethical use of AI is a critical issue in both healthcare and fintech. Ensuring that AI systems are transparent, fair, and accountable is essential to maintaining public trust. In fintech, this involves creating algorithms that do not discriminate against certain groups and ensuring that AI-driven financial decisions are transparent and explainable. Both industries are increasingly focusing on these ethical considerations, working with regulators and stakeholders to develop robust ethical frameworks.
Thank you. Stay tuned for our next chapter, where we'll delve into more groundbreaking advancements.
Chapter 3: Significant Developments.
Max, let's dive into the latest significant developments in AI and fintech. There's so much happening that it's hard to keep up. Can you start by telling us about some groundbreaking advancements in AI, particularly in healthcare?
Absolutely. Companies like Babylon Health are using AI to provide medical advice and consultations, enhancing accessibility and efficiency. Their AI tools can analyze medical images such as X-rays, MRIs, and CT scans to detect diseases like cancer much earlier than traditional methods. This improves the accuracy of diagnoses and enables early intervention and treatment.
That's fascinating. What about AI's role in personalized medicine?
AI is also making significant strides in personalized medicine. By analyzing large datasets of patient information, AI can tailor treatments to individual patients' needs. For instance, IBM's Watson Health uses AI to provide oncologists with treatment recommendations based on the latest medical research and individual patient data, improving outcomes and reducing side effects.
That sounds revolutionary. What are some of the challenges in implementing these AI technologies in healthcare?
Despite these advancements, several challenges remain. Ensuring the accuracy of AI models is crucial. They must be trained on diverse and representative datasets to avoid biases. Data privacy and security are also significant concerns due to the sensitive nature of healthcare information. Additionally, integrating AI systems into existing healthcare infrastructures can be complex and costly, requiring substantial investment in technology and training for healthcare professionals.
It's great to see these issues being addressed. Moving on, how is AI being used to improve administrative tasks in healthcare?
AI is significantly impacting administrative automation in healthcare. It can streamline processes like medical billing and coding, reducing errors and speeding up reimbursements. AI-powered electronic health record (EHR) systems manage patient data more efficiently, ensuring quick and accurate access to medical histories. AI also helps with compliance and reporting, generating necessary documents automatically and ensuring adherence to healthcare regulations. This not only saves time and resources, but also allows healthcare providers to focus more on patient care.
That's impressive. Let's shift gears and talk about significant developments in the fintech sector. What's new there?
In fintech, innovation is thriving, especially with digital banking solutions and blockchain technology. Neobanks, which are digital-only banks, are gaining popularity due to their user-friendly platforms and low fees. These banks use AI to offer personalized financial advice and automated customer service, enhancing the overall banking experience. Blockchain technology is improving the security and efficiency of financial transactions. For example, cross-border payments, which traditionally take days to process, can now be completed in seconds using blockchain.
Can you give us an example of a fintech company making waves with these technologies?
Sure, one notable example is Revolut, a neobank that has rapidly expanded its services worldwide. Revolut uses AI to provide personalized spending insights and budgeting tools. Additionally, it offers cryptocurrency trading, allowing users to buy and sell cryptocurrencies directly from their accounts. Another example is Ripple, which uses blockchain technology to facilitate real-time cross-border payments for financial institutions, significantly reducing transaction times and costs.
That's really interesting. How are traditional banks responding to these fintech innovations?
Traditional banks are responding by partnering with fintech companies and adopting their technologies. Many banks are integrating digital banking solutions into their offerings, such as mobile apps with AI-driven financial management tools. Some are also exploring blockchain technology to streamline their operations and offer faster, more secure services. This collaboration between traditional banks and fintech companies is creating a more competitive and innovative financial sector, benefiting consumers with better services and lower costs.
It's great to see such collaboration. What about the impact of fintech on investment strategies?
Fintech is revolutionizing investment strategies through robo-advisors and AI-driven analytics. Robo-advisors use algorithms to provide personalized investment advice and manage portfolios based on individual risk preferences and financial goals. This has made investment services more accessible and affordable, particularly for younger and less wealthy investors. Additionally, AI-driven analytics can analyze vast amounts of market data to identify trends and opportunities, helping investors make more informed decisions. Companies like Betterment and Wealthfront are leading the way in this space, offering innovative investment solutions to a growing number of clients.
That sounds promising. What about the ethical use of AI in these industries?
The ethical use of AI is a critical issue in both healthcare and fintech. Ensuring that AI systems are transparent, fair, and accountable is essential to maintaining public trust. In healthcare, this means developing AI models that are unbiased and inclusive, as well as protecting patient data privacy. In fintech, it involves creating algorithms that do not discriminate against certain groups and ensuring that AI-driven financial decisions are transparent and explainable. Both industries are increasingly focusing on these ethical considerations, working with regulators and stakeholders to develop robust ethical frameworks.
It's good to see these industries taking ethics seriously. To wrap up this chapter, let's talk about some recent significant corporate developments. What are some of the latest highlights?
Absolutely. One of the major corporate developments is Amazon's recent acquisition of a leading AI startup focused on natural language processing. This move is expected to bolster Amazon's capabilities in AI-driven customer service and voice recognition technologies. Additionally, Tesla has announced a new initiative to integrate advanced AI into its self-driving technology, aiming to enhance vehicle safety and performance. These developments highlight the ongoing efforts by major corporations to leverage AI for strategic growth and innovation.
Thank you, Max. These developments are indeed significant and reflect the rapid pace of innovation in AI and technology. Stay tuned for our next chapter, where we'll delve into more groundbreaking advancements.
Chapter 4, Finance Series, Investing in Different Asset Classes, Part 3 of 13.
Welcome to Chapter 4 of our Finance series. Today, we're diving into real estate investments, a crucial asset class that offers diverse opportunities. Can you walk us through the different types of real estate investments?
Absolutely. Real estate investments can be broadly categorized into residential, commercial, and industrial properties. Let's start with residential properties.
In Houston, the residential real estate market is thriving, isn't it?
Yes, it is. This includes single-family homes, luxury apartments, and multifamily units. Factors such as economic growth and a steady influx of new residents are driving demand. AI tools are increasingly being used to assess property values and predict market trends, making investments more informed and strategic.
That's fascinating. How about commercial properties?
Commercial properties encompass office spaces, retail outlets, and industrial parks. Houston's strategic location and robust economy make it an attractive destination for commercial investments. AI applications in property management, tenant analytics, and maximizing rental income are becoming standard practice.
And what about industrial properties?
Industrial properties include warehouses, manufacturing plants, and distribution centers. Houston's role as a logistics hub greatly enhances the attractiveness of industrial property investments. AI is being used to optimize supply chain logistics and facility management, ensuring efficiency and reducing costs.
Now let's talk about real estate investment trusts or REITs. How do they work?
REITs offer a way to invest in real estate without the need to directly own property. They allow investors to buy shares in a real estate portfolio that receives income from various properties. The benefits of investing in REITs include diversification, liquidity, and steady income streams.
Are there specific REITs focusing on the Houston market?
Yes, there are. Some REITs focus on Houston's real estate market, investing in healthcare facilities, commercial properties, and residential complexes. Houston's dynamic market can enhance the performance of these REITs. AI is instrumental in selecting high-performing REITs and managing real estate portfolios effectively.
Let's move on to strategies for investing in real estate. What can you tell us about the buy and hold strategy?
The buy and hold strategy involves purchasing properties and holding them for an extended period to generate rental income and benefit from property appreciation. Houston's strong rental market and potential for property appreciation make this strategy attractive. AI helps identify lucrative investment opportunities and manage rental properties efficiently.
What about flipping properties?
Flipping involves buying undervalued properties, renovating them, and selling them for a profit. This strategy can be quite lucrative in Houston's diverse real estate market, but it also comes with risks. AI tools can assist in finding undervalued properties, estimating renovation costs, and predicting market demand.
And finally, rental property investments. How do they work?
Investing in rental properties involves buying properties to generate passive income from rent. Houston's growing population and economic activities drive rental demand. AI-powered property management systems streamline operations, enhance tenant experiences, and maximize returns.
Thank you. It's clear that real estate investments in Houston, enhanced by AI, offer significant opportunities. Stay tuned for our next chapter, where we'll continue exploring the intersection of finance and AI. Welcome to Chapter 5 of our AI series, where we're exploring advanced applications of ChatGPT. Today, we'll delve into how ChatGPT is transforming healthcare, education, and legal services. Let's start with healthcare. How is ChatGPT being used in this field?
ChatGPT is making significant strides in healthcare by assisting in patient interaction, diagnostics, and administrative tasks. For instance, in Houston, healthcare providers are using ChatGPT to enhance patient engagement. It can answer common medical questions, schedule appointments, and provide personalized health information. Additionally, ChatGPT aids doctors by summarizing patient records and suggesting potential diagnoses based on symptoms and medical history.
That's impressive. What about its role in education?
In education, ChatGPT is revolutionizing personalized learning. It serves as a virtual tutor, providing students with tailored explanations and practice problems based on their individual needs. In Houston's educational institutions, ChatGPT is also used to automate grading systems, giving teachers more time to focus on interactive and hands-on learning. Furthermore, it can generate educational content and resources, ensuring that students have access to high-quality learning materials.
And how is ChatGPT being utilized in legal services?
ChatGPT is transforming legal services by streamlining various processes. It assists lawyers with legal research by quickly sifting through vast amounts of legal texts and case law to find relevant information. In Houston's legal firms, ChatGPT is also used to draft documents, such as contracts and legal briefs, reducing the time and effort required for these tasks. Additionally, it helps in client interactions by providing instant responses to common legal queries and scheduling consultations.
Those applications are quite diverse. Can you provide more examples of how ChatGPT is impacting other sectors?
Certainly. In the customer service sector, ChatGPT is being used to handle customer inquiries efficiently, reducing the workload on human agents. It can provide 24/7 support, offering instant responses to frequently asked questions and resolving common issues. In financial services, ChatGPT assists with personal financial planning, providing users with advice on budgeting, investments, and savings. It can analyze spending patterns and suggest ways to optimize financial health.
ChatGPT's versatility is indeed remarkable. What are some future trends we can expect in the development of ChatGPT technology?
Looking ahead, we can expect ChatGPT to become even more sophisticated with continuous improvements in natural language processing. Future developments might include more personalized interactions, where the AI can remember user preferences and past interactions to provide even more tailored responses. Additionally, integration with other AI systems could enhance its capabilities, allowing for more complex tasks and deeper insights. We might also see increased use in sectors like mental health support, where ChatGPT could provide immediate assistance and guidance.
That sounds promising. Any final thoughts on ChatGPT's impact across different industries?
ChatGPT is revolutionizing the way we interact with technology across various sectors. Its ability to provide immediate, accurate, and personalized responses is transforming customer service, healthcare, education, legal services, and more. As the technology continues to evolve, its applications will expand, offering even greater benefits and efficiencies. It's an exciting time to witness and be part of this AI-driven transformation.
Thank you. It's clear that ChatGPT's advanced applications are making a significant impact across multiple sectors. Stay tuned for our next chapter, where we'll continue exploring the fascinating intersection of AI in various industries.
Business Idea, AI-powered healthcare solutions platform.
Max, could you introduce our listeners to the concept of an AI-powered healthcare solutions platform?
Absolutely. Imagine a comprehensive platform that offers diagnostic tools, patient interaction solutions, and administrative support, all powered by AI. This platform integrates advanced AI technologies to enhance the efficiency and effectiveness of healthcare delivery, particularly in a city like Houston, which is known for its medical prowess.
That sounds intriguing. Let's start with AI diagnostics. How can AI enhance medical diagnostics?
AI can revolutionize diagnostics in several ways. For instance, it can analyze medical images like X-rays, MRIs, and CT scans to detect diseases early, such as cancer or fractures. Additionally, algorithms can interpret lab results quickly and accurately, providing healthcare professionals with actionable insights. Predictive analytics can also play a role, forecasting patient outcomes based on historical data and current health indicators.
AI diagnostics sound like a game changer. What about patient interaction solutions?
AI can significantly improve patient interactions. ChatGPT-based virtual assistants can handle patient inquiries, provide health information, and offer preliminary consultations. These assistants can automate appointment scheduling, reducing administrative burdens on staff. Interactive symptom checkers can guide patients to appropriate care based on their inputs, enhancing the overall patient experience.
That's impressive. How can AI streamline administrative tasks in healthcare?
Administrative automation is crucial for healthcare efficiency. AI can automate medical billing and coding, reducing errors and improving reimbursement rates. It can also manage electronic health records, EHR, efficiently, ensuring data is easily retrievable. Moreover, AI can help ensure compliance with healthcare regulations and generate necessary reports automatically, saving time and resources.
Who would be the primary target market for this platform?
The target market includes hospitals and clinics looking to improve operational efficiency and patient care, health insurance companies aiming to reduce costs through accurate diagnostics and efficient care management, and telehealth providers needing enhanced patient interaction and support for remote healthcare delivery.
What revenue models could sustain this platform?
There are several viable revenue models. Healthcare providers could be charged a monthly or annual subscription fee for access to the platform. A pay-per-use model could be implemented for specific AI diagnostic tools and advanced features. Additionally, integration services could be offered to connect the platform with existing hospital information systems, HIS, and EHR systems.
That sounds like a solid plan. How should development proceed?
The development plan would start with research and development, understanding the needs and pain points of healthcare providers. AI algorithms for diagnostic tools and virtual health assistants would be developed, and a prototype would be built and tested. Next, pilot testing would involve partnering with hospitals and clinics to collect feedback and refine the platform. Finally, a full-scale launch would include a marketing campaign targeting healthcare providers, offering training and support to ensure smooth adoption and integration.
What strategies would you recommend for marketing this platform?
Conducting educational webinars and workshops to demonstrate the platform's capabilities and benefits would be key. Partnering with healthcare associations and organizations to promote the platform can also be effective. Publishing case studies and testimonials from pilot tests would build credibility and trust.
What metrics should be monitored to gauge the platform's success?
Key metrics would include the user adoption rate, customer satisfaction, and diagnostic accuracy. Regular surveys to gather user feedback would help ensure high satisfaction levels, while monitoring the accuracy and reliability of AI diagnostic tools would maintain high standards.
This platform could truly revolutionize healthcare. Any final thoughts, Max?
By focusing on AI-powered healthcare solutions, this platform can transform how healthcare providers diagnose, treat, and interact with patients, leading to better outcomes and more efficient operations. It's an exciting intersection of technology and healthcare that has immense potential.
Thank you, Max, for this insightful discussion. Stay tuned, listeners, as we continue to explore innovative ideas that are shaping the future of finance and technology.
Stay connected.
As we wrap up today's insightful exploration of AI in finance, let's delve into the unique artworks that accompany our discussions. Max, there's more to these artworks than meets the eye, isn't there?
Absolutely. Our luxury conceptual digital art is not just a feast for the eyes, it's crafted with potential investment value in mind. Each piece is inspired by and linked to a specific chapter in our podcast, creating a unique narrative context that enhances its appeal. Drawing inspiration from the trajectory of Andy Warhol's iconic prints, which soared in value over time, we anticipate our artworks could similarly appreciate as digital and AI-influenced art gains broader recognition.
Warhol's work took some time to be fully appreciated, didn't it? How does that relate to our art?
That's right. Initially, Warhol's pop art faced skepticism and was met with mixed reactions. Some of his early works were priced modestly, often sold for a few $100s. Yet, over the years, these same pieces have appreciated enormously in value, with some reaching tens of millions at auctions. For instance, Warhol's 8 Elvises originally sold for $100,000 in the 1960s and later fetched over $100 million. We hope our art follows a similar trajectory, initially niche but growing in significance as the intersection of technology and luxury art becomes more mainstream.
And our listeners play a role in this as well, correct?
Indeed, they do. By engaging with our artwork on social media, especially on Twitter where we frequently post updates, our listeners help determine which pieces we feature. The most popular selections by our listeners are initially offered for sale on Etsy. Looking ahead, we're excited to announce plans for the FinanceFrontierAI 2025 Art Collection, a future marketplace where these artworks will be traded like collector's cards. For truly standout pieces, we'll offer exclusive, limited edition artworks as NFTs, showcasing the best of our annual collections.
So, engagement from our listeners can influence which artworks are available?
Exactly. We encourage everyone to let us know if a particular piece captures their imagination. You can reach out through the contact form linked in our show notes or directly comment on our Twitter posts. This not only helps us gauge which artworks are most popular, but also fosters a vibrant community around this innovative blend of art and technology.
For our listeners who want to dive deeper and stay ahead with the latest developments, what do you recommend, Max?
I strongly recommend subscribing to our AI Finance 5 newsletter. It's your weekly summary of the top 5 insights from our podcast, crafted to give you a leading edge in AI and finance. Just fill out the contact form linked in our show notes, and every Friday, you'll receive a concise overview of crucial developments directly in your inbox.
Fantastic! And for those who want to continue this discussion and not miss any of our episodes, where should they go?
To ensure you never miss an episode, subscribe to us on Apple Podcasts or Spotify. Your subscription helps us climb the charts and reach more listeners, expanding our community of tech-savvy investors. Plus, it's the best way to stay updated with our latest episodes and the evolving world of AI and finance.
We also want to hear from you, our valued listeners. Your feedback helps us improve and tailor our content to your interests. Here are a couple of questions we'd love your input on. Would you prefer if we created 2 separate series, one focusing exclusively on AI and another on finance, or do you enjoy the combined format we currently have? Would you like a series that goes more in-depth on a single hot topic? Or do you prefer episodes like this one, where we cover the most popular news from the past week? Please let us know your thoughts by commenting on our social media posts, or through the contact form in our show notes. Thank you to everyone who has joined us on this journey. Your curiosity and engagement are what drive us forward. Stay connected, keep exploring, and together, let's uncover the future of technology and finance.
Disclaimer and acknowledgements. This content is for educational purposes only and is not intended as financial or legal advice. We thank sources such as Bloomberg, Reuters, CNBC, Forbes, Financial Times, The Wall Street Journal, Science Daily, TechCrunch, Investing.com, Artificial Intelligence News, Money.com, Yahoo Finance, Google DeepMind, VentureBeat, AI News, New Scientist, The Verge, The Guardian, CMS Prime, Council on Foreign Relations, The Currency Analytics, TechXplore, Multi-Platform AI, Al Jazeera, Mint, Electric, Engadget, Advisor Perspectives, NS Medical Devices, PIMCO, Harvard Business Review, MIT Technology Review, and Wired for their contributions to the field, which inspire our discussions. Copyright 2024 Max Vanguard. All rights reserved.